Good afternoon. This is Ken at Tortoise Capital. This is a speed run of the swing portfolio. Friday's afternoon charge in the indices across the board filled me with some concern about interventions over the weekend. So you're going to see a lot of the runaway short positions got covered. In many cases, we had multiple positions and multiple exposures. So I kept a few. But I raised a lot of cash and took advantage of last week as the week that was. And you'll see the ones that I retained. But I'm ready to get back on intraday with those short positions. And then if they are successful, let them grow into swing trades. So still bearish volatile conditions, much to be worried about on the long run. You can see that just in the stack of daily winters and no summers. And just a couple, or no springs, a couple summers in the defensive plays, and lots of falls too. So this is still a intraday volatile, very vulnerable market. You don't need to be told that. So I should also say the personal impact on the coronavirus. Alex, who was going to come visit us from Asia for the boot camp in March, is not able to do that. So I'm going to do a separate one-on-one session with him for Q&A since it's a small venue anyway. So there is room available in March for that weekend, 18 and 19 March. If you want to come in and take that slot, we can still get that arranged. But yeah, starting to make a impact in personal lives now. So here we go, speed run. Alcoa. We were too short, and I covered on the gap down and bounce up. So the coverage was right in around here. So 2 scoops and in the bag. Apple, we weren't short, but that's just how volatile that has been. Longer term, is that an attractive buying point? You could talk yourself into that. ARC, with that large exposure to Tesla, harshed all the way below the 270 and then closed strongly. I'm not in it. Just monitoring. Covered the 2 scoop short in the Aussie dollar US, and that's, I think, reflective of the afternoon strength that emerged in materials. So that made me believe maybe there's some intervention coming, or that was a recognition of these things were on sale. But I wanted to cash it when I could over the weekend. Boeing, I'm still short this one, 2 scoops, and the stop I'm bringing down into right here. We'll see how that goes. If anybody's going to suffer in the Dow, that would be it. Caterpillar, on the other hand, closed up 0.79. So just as a way of comparison, Boeing was down day over day 4.5%, but Caterpillar, which we also had 2 scoops on, I did take that exit here, so we're out of that one, and I'm enjoying that win. Cliff, we were 3 scoops short, so I covered off the rebound. Cut, we were 1, 2, 3, 4 scoops short, so I made sure we got all of that. Diamonds, 3 scoops short, covered. 3 scoops short in Devon Energy and covered. Now, none of these are an indication I'm ready to go long. It's just that the exposure on the short side was getting so concentrated and all in that I needed to protect against weekend shenanigans. So this was 1 short and covered in emerging markets, 1 short and covered in EFA, that's the global index. That's one we should have had more than 1 position in short, but, there you are. I've kept Japan open because of all the countries that are aging, Asian, and vulnerable to coronavirus, and got to import a lot of things, Japan. So I'm going to move that stop down to about here, so that'll lock in that gain on the 1 position. And since that was just 1 position anyway, that was fine. On the other ones where I had multiple positions, could I have kept a piece? Yeah, I could, but I don't. When I get out, I like to get all out. That's a psychological limitation on my part, so sue me. Mexico, we were short 1, covered. Brazil, short 5, definitely covered. Home Depot, we've just been observing that one. A strong member of the Dow and closed pretty strongly. Now, CAT was better, but this was pretty good, so I'm still watching that. I think if it starts getting weak again, my exposure to weakness in Home Depot is going to be really just through the indexes and volatility. But long term, I'm really starting to stalk this one. I'm thinking somewhere around, if it crosses above Z2, I'm buying with a stop at the old Z3, something like that. So like if it opens up inside here and goes through, I'd probably start initiating. The Russell, we've been playing volatility the other way. I felt it was too late to get in here when it crossed. You can see how much I left on the table because of that decision. I'm not going to call it a poor decision. It was the right decision at the time, but the poor decisions were probably in here where I didn't play it. On the other hand, I was already fully exposed to my limit on short position, so you can't get them all, and don't try. Russell, Russell. The real estate, same difference. This was odd to me because of the defensive nature of it, so that just goes to show how that common beliefs and heuristics don't always play out. We're going to see this phenomenon also in wheat and precious metals. You would think if there was anything that was going to respond to global slowdowns and whatnot, it would be gold and silver and precious metals, but they got crushed just like real estate. So you have to be mindful of what the price is telling you as opposed to what the rules are saying should be happening. Coal, we covered. It was just one piece and it was going slow, and we're short oil, but coal we'd gotten what we could out of that. McDonald's is one that also, like Home Depot, I got to believe you love it. Its rebound didn't get above the close, and this is one where we missed this entire move all the way down here. That's a 15% move. So that's one that's on the short list. The alternate energy, clean energy, came down, found support at 270. That's one I think we could start thinking about buying that one. Longer term, something like that. Above that, with a stop here, I'm open to that possibility. Cash, the triple inverse oil. We're still exposed on oil, the single leverage, but I wanted to make gains on that one. SDOW, intraday only. SPCE, that's that volatile Tesla alternative. I think I'm ready to get back in that thing, something like that. Starting with an intraday hybrid frog. Let's see. Simon Property Group had some little rebound, but it was not persuasive, so we're 2 scoops short. I'm gonna, I think, put that stop here. Covered the short in the triple S&P. That was the market health check. Treasuries were still long 3, and moved my stop up to the daily low. Longer term, that could be amazing. Studying Tesla. I would rather put my speculative money in that Virgin Galactic. But if you were a long-term Tesla believer, that's somewhere around 675. Why wouldn't you? I mean, that's a 50% move from here just back up to the previous high. So we got a 50% gain there. You could talk me into that. UDOW, starting off intraday on that. Boy, that's one I'm really starting to get tempted. Sometime this week, I think I'm going to get a swing position in that if the selling looks stable or there's any kind of dramatic price action from the Fed and the global banking conspiracy. Just studying natural gas. Oil, I'm still short 1. Moved my stop down here to the high of the day. UVXY, when I shifted out of VIX, I started playing this one intraday and then turned it into a swing. And I got all out of that because it was getting nervous. So that's the one that I missed in VXX and been playing that one with UVXY. Wiz, completely broken. You heard me talk about that on the problem with the monthly rebalancing. They got great ideas, but man, that monthly, locking into a monthly rebalancing is just doesn't stay connected to the world. You would think that a ETF that has in its name Bear Rider and artificial intelligence And tactical savvy, it's not in their name, tactical savvy, but you would think that in a condition when the world experienced the worst and fastest 10% sell-off ever, that a robot should be able to get that, but it missed it completely. So that's what I think about that. Walmart, I'm ready, I think, to start buying right there. That's a classic bottoming tail with a stop right about there. I'm buying that one tomorrow. This is the dog that didn't bark in the night. I mean, we had 4 scoops long on Wheaton. That's looking like a pretty smart exit. And then I don't understand this at all. Why that's collapsing while the market is suffering. You would think that defensive play would work. So I think that is going to resolve itself and people are going to buy gold on sale, something like that. I'm ready to do that in Wheaton. Covered win. Covered in steel, U.S. Steel. That was part of that whole basic materials recovery. And there it is again. Now 4 short in XLB and covered. So I think we got to be ready to go here like this. I mean, you're buying raw materials on sale at the start of the business cycle, and people are still going to need stuff. It's just going to be produced locally and regionally now, and less transportation and global. Is this the start of the regeneration of regional manufacturing to avoid the inherent risks in global supply chains that are vulnerable to exactly this kind of threat? Maybe this is the rebound of U.S. manufacturing when manufacturing in other parts of the world. Look for regional manufacturers to start winning. That's a genuine insight. Energy covered. Financials, I wasn't playing them, but boy, do they got skin in the game here as they try to put together some kind of consortium to save the world with taxpayer money. This is technology, I think. Yeah, look at that bottoming tail and just a solid rebound. I think you got to buy it there with a stop at Z3. That's the play. Right there. Don't trail that stop. Let's set that as a wide initial swing position. And there we are. That's the speed run. Let me see if I can get the daily or the weekend report. So this should be like the least surprising weekend report narrative of all. Bear volatile, massively oversold, even on the low end of neutral on an annual. Massive sell-off here in risk Z. How good was the call at the rejection of the zero line and the resumption of winter? I mean, pay attention to that. Theoretical exposure at zero, all the usual suspects for blended month rebalancing for the month of March. Treasuries, technology, and a bit of gold. The monthly support levels, look how much that thing sold off on a month. Bam. And then all the support levels. Here's long-term fair value on monthly basis. It just tipped over into the fall. There's still plenty of room to go. So in terms of monthly holders, those things are still a bull market. It just tipped into fall. That's the first alert of waking him up. Weekly, a little more refined, fair value at 310. It's already below fair value. So on a weekly basis, you could tell yourself you're buying on the side of value. And then support levels, and it just tipped over into fall from an extended run in the deep summer. So, and then daily, you've heard me talk on this one at length. We're in the winter, so I have a short bias. That means short-term trading takes predominance. Any swing trade I'm going to get into is going to start with an intraday hybrid frog gain and then save a piece with, and then fund it with markets money. So I'm offloading my risk in that way. Self-explanatory. Look at energy. That's why we're short so big. And that's why we're triple scoop long in treasuries. Self-explanatory. Cash all the way across the board. U.S. tech is the only thing green on the board. until you get up and look at some of these. Look how bad oil's gotten smashed too. Treasuries, gold, technology, government bonds, technology, treasury, inflation-protected treasuries, all the defensive plays, and then the one single hope of growth, U.S. tech. That's the argument between Virgin Galactic and Tesla at some point, and Apple and Microsoft. Liquidity. Just look how much tech has come back into the discussion for trader activity. This used to be switched 2-to-1 for small caps versus tech, and then the large cap techs come along lately in the last 6 months and been sucking up all the cash, and so that's now the trading vehicle of choice. Daily health checks and so forth. Massiveness in the auto framers, all the big breakdowns. No super pinches, everything is voted. Plenty of longer term auto framers, and now you can see the ones that have been crushed the most below their own 270. These are now the really deep value plays that are available. Walmart, Chevron, Disney. I mean, don't you love Disney being 9 ATRs below its long-term fair value? I sure do. And they've already endured the changing of the CEO, so that has contributed to their loss. So Disney, why not? Nothing on a squeeze because of the huge volatility. I've talked through this already. No surprises. That's how massive that sell-off has been. The slope stat. Again, plenty of warning right here, guys. When that slope crosses its own 10-period moving average going the other way, that's when the warning hit right there. At 3:30 was the warning from that signal. Learned that lesson. World's worst 10% rapid sell-off. That's what that looks like. Climb up the steps, jump out the window. Sometimes you just hit the next landing and then you can build from that. Other times the floor collapses all the way through to the basement. Volatility. So you know that decay is going to start working pretty favorably now. Thinking about you, inverse VXX. In the old days, that would have been the XIV trade. They're gone, but there's alternatives. Almost, 9 sigma adverse move on the 10-period slope stat. 9 sigma. You're supposed to see those one every other lifetime of the universe in a normally distributed world. So I guess that's not what the market is. It's not a random number generator. There's proof. The 90 has rolled over, is coming back. The 30 has rolled over, coming back. Notice how those warnings were already in place before the collapse. So if you pay attention to the market and get that call right, you have an early warning. Word to the wise. That's everything I want to cover. Take good care, guys. We'll see you in the chat room. Couple things I just want to point out. Here's a note from Trader AR talking about the evolution of his feelings about intuitive trading and starting to internalize this. This is what it feels like when you're internalizing. So take a look at that. He's been to a couple boot camps and has gone through some accelerated learning and personal coaching, and it's making a difference. I'm going to say your wife may think you're insane. Yeah, she might be right. This Dropbox links on Patreon leads to a link on Dropbox where we're going to start storing TC 2000 bundle case studies from end users. There's already 3 of them in there showing how people are using that bundle to make a difference. My buddy from work, Dr. Morrison, currency trader, locked in a 5K gain this week. All he's doing is applying the bundle. This strategic thinking case study is a quick look as a way to think about microloaning and business models and strategic thinking, and a case study in how to do good in the world. So I shared that with my friend in Australia, a philanthropist, and he said, "That's funny. I was writing a memo to you about the effect your techniques have had on his philanthropic foundation and the leverage it's given him to do good in the world." That makes me feel pretty good, because the good work that he's doing by applying these ideas at the institutional level pays for all the evilness of my earlier years and makes me want to keep going. So align yourself with the forces of good, and you can be part of the team even if you're not perfect. So that's a lesson that I learn every day. This one on adding gas and Jai-Yo, add gas, is a way that we're just going to get it done. So here's how we're going to do that. This defines Jai-Yo for you and some of those words of encouragement. So in the coaching project, the guys are going to put together their own personalized list of preferred videos or favorite videos. We're going to make those available with an explanation why they found it useful. There's 3 examples, and it's really to help guide your way. Maybe read what they say about it and fast track your way to looking at those publicly available videos. And we're going to get that done. And I've given them some guidance on how to use the coaching project for even more value add by aligning it with their personal trading plan development. We'll share some of those. I'm going to share them all with you, and encourage you to think about joining the Gold program and coaching long term and working together to collaborate and succeed. I just put out this little notice. I need a chief of staff and a couple executive assistants to help organize certain things that will help the entire team. Like I'm going to have somebody that acts as a curator of those personal playlists at Yahoo, so that we have ways to start sharing the information, so that I don't become the single point of failure in this collaborative learning effort. So if you're interested in, and you got a couple hours a week that you could work on a project and use that to contribute to the community, we'll put you to work. Just send me an email and we'll get it sorted. Thanks so much for your kind attention, guys. Keep yourself safe and healthy. Wash your hands. Get plenty of rest and sleep. Take care of others. Do good around you. Keep marching. Let's get this thing done. Keep your wrist measured and your powder dry, I should say that. Take good care.